Armando. This is Ryan with TrendLizard again. Now we're taking a look at XME, which is the Spiders Metal and Mining ETF, another one that we've looked at before for you, I think twice, so I think that makes this the third time. So again, starting kind of from the 30,000 foot view, it appears as if a large three-wave decline ended off the 2000 low into the 2011 high into the 2016 low. Last time we had talked, I had indicated I wanted to see it move above 31 just to kind of bolster the case that this is in fact a counter trend move. That has happened since the last time I talked to you. Super bullish stuff. This looks like a three-wave move. I don't see any other way to label it. That's really bullish stuff. That indicates that this is the real deal and this is a trend that appears sustainable for the long term. So that's really bullish stuff. So let's zoom in and look a little bit closer at things here. First up, this just looks at that three-wave decline and the breach of 31 to the upside. So that's a really clear move. There's just no way to label that as a trendy move, which is bullish stuff. It means that this has to be the trend because this is not the trend. So let's take a closer look at what's going on off the 2016 low. Here it is. As I indicated last time, it's been a really trendy advance to the upside. That's good stuff. The first leg was a beautiful five-wave advance. Since then, it's been a little bit more cryptic, but still a very strong move that is clearly not over. So I'm assuming you own this at this point. There's two different ways to play it here. If you're playing this as a short-term trade, basically, you could use a stop as close as 32, put your stop level as close as 32 on a short-term basis. What this would do is it would get you out to avoid another pullback, something like this one that we saw back in August through September back in 2016, because if 32 is breached, it would indicate that a larger pullback is forming, just more of a near-term, potentially mid-term type pullback. But if you're playing this on a longer time frame, which I'm assuming you are, I would keep your stop at 28.50. Actually, I think it was at 27 before, but I would move it up to 28.50, leave it there. This will keep you in the move as long as this advance is continuing. You might hit a pullback like this in the near future that kind of turns things sideways to down for a month or two. But again, that's the way I personally would trade it. I would keep the stop at 28.50. That will keep you in the move as long as it's in play. But again, if you want to do more of a short-term approach to it, you could move the stop up to 32. That would get you out of way of any kind of pullback that comes along the line like this. So overall, this still looks really bullish. I would expect it to continue significantly higher overall. I don't think, I do think it might hit a snag sometime soon. But again, overall, as long as the trend is up, that's kind of where you want to be. So hopefully that's helpful. I'll get to your next one in just a minute.